Hello everyone. This is the market report video for today, 29th February 2024 for the Indian stock market in terms of Nifty and Bank Nifty. I know yesterday there were some serious buzz around what SEBI said, when they said, why they said, and why do they even care where mutual fund invest their money means, etc. So first let's discuss those in detail clearly, then we can see our regular stuff. Not yesterday, but on Tuesday itself, SEBI asked the Indian Mutual Fund Asset Manager to give their stress test report for review. I mean, it's not new, it's a common regulatory measure, like how RBI periodically review the Indian bank's stress test report. Likewise, SEBI also asked the stress test report of mutual funds to review. In addition, they asked the asset managers to give more information about the risk associated with small and mid-cap funds, like who owns how much and what's the liquidity challenge that the stock had got, etc. So that's all SEBI did. Basically asked the overall stress test report with the additional information. Here, stress test is applicable for all, large cap, mid cap and small cap. I mean, in the event of market sharp sell-off like in March 2020, how mutual fund will protect the investors' money. That's the objective, which is absolutely good. To be clear here, they haven't said any to the mutual fund asset managers like not to invest any in mid cap or small cap, etc. So this happened on Tuesday. Though there are some nervousness due to the additional mid-small cap information request, yesterday market took it as a regular and Nifty opened flat. However, around 10 am, in response to the SEBI's previous day action, mutual fund industry body, here please note not SEBI, it's a non-profit private association called Association of Mutual Fund in India, AMFI, asked their mutual fund members to put a policy in place to protect the investors for the risk associated with small and mid-cap segments. I'm just repeating the same exact word meaning from AMFI request. This appropriate and protective measures to protect investors not just limited to moderating inflows into mid-cap and small cap, but also the other measures like portfolio rebalancing and much more, etc. So that's the story. SEBI haven't influenced the market, it's just the mutual fund association. And to be honest, it's not new, but as a knee-jerk reaction with a bank Nifty expiry day volatility made the Nifty to fall below 22,000 mark. I mean, I said it's not new because from July 2023 onwards, some major mutual fund companies such as Nippon India Life Asset Management, Tata Mutual Fund, all stopped accepting lump sum amounts in their respective small cap funds. So if they don't accept the money means they won't invest. Hence, major mutual funds were already moderated in the middle of last year itself. Anyway, back to the market. Because of this AMFI letter, all the sectoral index ended in the red with auto, oil and gas, power and realty down around 2% each. Even both mid-cap and small-cap index also fell near 2%. About institution, for the third consecutive day, FII was net sellers. They net sold for 1,880 crore rupees. However, equally DII supported the market as they net bought for 1,830 crore rupees. Those were the takeaways from yesterday's Indian market. Coming to US, before their market opening, Bureau of Economic Analysis released the quarterly basis second GDP growth rate estimate for the 2023 fourth quarter. Here, the data revised to 3.2% from first estimate 3.3%. Though the value is significantly lower compared to 4.9% growth in third quarter, still 3.2% is very strong growth for the quarter-on-quarter basis. Here, this is not the market-friendly data. In addition, tonight, US government is going to release the very important PCE inflation data for January month. For that, yesterday, analysts released their forecast. On month-on-month basis, core PCE inflation expect to increase 0.4%, which is significantly higher compared to December month 0.2%. In response, both created the profit booking and made all three major index to open significantly negative. However, Dow Jones alone trimmed some of its loss with the help of Boeing and Goldman Sachs recovery, but still all three major index closed negative. Dow Jones decreased marginal 0.06%, S&P 500 decreased 0.17% and Nasdaq down by 0.55%. In case of VIX, it increased 3% and moved near 14. About oil, it haven't changed much. At the time of this video, Brent crude trading around $82 per barrel and WTI crude trading at $78 per barrel. Coming to Indian ADR, all of them closed negative. Both banking stocks closed negative of around 1% in line with the Indian market, whereas in IT stocks in India, Infosys closed positive, but in US it was down 0.33%. In case of Wipro, it was down over 2%. About GIFT Nifty, today early morning it closed at 21,916. As we know, today is monthly expiry day, so I'm expecting no premium. Based on that, for now, it's indicating flat to negative 40 points opening. So those were the things happened yesterday in the global market. Now let's look at the new India specific information. First, yesterday NSE had a periodic review. As a result, effective from March 28th in the Nifty 50 index, UPL will be going to replace by Shriram Finance. Regarding other index such as Nifty Next 50, Nifty 100 and Nifty Mid Cap, who are all added as a replacement, those detail I will show in the screen. If required, please pause and have a look. It's difficult to explain all, but all those influenced stocks will be on focus today. Second, yesterday as per the market research MK's report, except soap, edible oil and biscuits, on an average, FMCG companies due to the demand increased the other products price by up to 10%. Widely, this price increase will increase their revenue and profit margin. Hence, overall, this is positive for whole FMCG sector except those soap, edible oil and biscuit products related. Third, SEBI issued an administrative warning to ICICI Securities regarding their merchants banking activities. From the outside, it looks negative for the stock, so it will be on focus. As a summary, US market closed negative, but now US future market is trading positive, so global momentum is mixed. In line with that, Indian IT ADR, GIFT Nifty for now all indicating the flat to negative opening. However, have to be little cautious. Today is monthly expiry and in the aftermarket hours, there are two important macros are scheduled to release. Indian GDP growth data and US PCE inflation data. Both these macros are very much influential in the stock market. Hence, we can expect some nervousness. Anyway, moving on, as per stock open interest, Maruti Suzuki, Bata India, Titan Company, ONGC, Bajaj Finance, LTI Mindtree and City Union Bank got an increase in open interest along with a negative close indicates the short build-up. On the other hand, Havells India, Motherson International, Bharat Electronics, Hindustan Unilever and Bharti Airtel got an increase in open interest with a positive price close indicating the long build-up. About the things to look out, early morning, Japanese industrial production growth and retail sales data are due. Then, during our market time, Germany's unemployment rate and retail sales data is scheduled to release. And in the aftermarket hours, first at 5:30 p.m., India's Q3 GDP data and at 7 p.m., US PCE inflation data are some of the items we need to keep an eye out today. Coming to technical, Nifty opened flat, but after an initial hover, it got the huge sell-off and hence it slipped below 22,000 mark and also closed below for the first time in the last 8 trading sessions. Thus, on the daily chart, it formed a long bearish candlestick pattern. If we combine the Tuesday candle, then it formed a bearish engulfing pattern. I mean, in yesterday pre-market only we discussed this. If we combine the Monday and Tuesday candle, then it's a bullish reversal. Now it's a bigger bearish reversal than the previous formation. That's the first negative point. More importantly, both daily and hourly momentum indicators have a negative crossover. Here all are sell signal and indicating the further weakness. In addition, it ended the day near the day's low. However, post-market correction moved it above 21,950 mark. So basically, it still defended the 21,950 on closing basis, which coincides with 21-day exponential moving average. Hence, if Nifty decisively closes below 21-day EMA, which is 21,950, then it could potentially trigger a correction towards 21,800 in the near term. Conversely, in case of a bounce back, 22,100 to 22,200 is the hurdle to watch out. In case of Bank Nifty, sellers took the control. Unlike Nifty, for the first time in the last 8 trading sessions, it closed below 46,000 mark. Thus, on the daily chart, it also formed a long bearish candlestick pattern. However, more on the negative side, unlike Nifty, Bank Nifty breaks not only 21-day exponential moving average but also 50-day exponential moving average, which all in the 46,300 to 46,200 zone. Hence, now that will act as an immediate resistance. On the downside, 45,675 coincides with a 61.82% of previous rise Fibonacci retracement 44,600 to 47,360, which expects to provide support from the short-term perspective. Regarding the monthly options front, the maximum call option open interest was at 22,200 strike, followed by 23,000 and 22,500 strike, with new call option writing at 22,200 strike, then 22,100 and 22,000 strike. Thus, from the options data also, it's indicating around 21,800 level as the immediate support. Whereas on the put front, the maximum open interest was at 21,500 strike, followed by 21,000 and 21,800 strike, with new put option writing at 21,800 strike, then 21,600. Hence, 22,100 to 22,200 is expected to be an immediate hurdle on the higher side for Nifty. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.